a weekly strategy roundtable discussion where we talk about current market conditions and any questions you might have about your subscription. Simon. Is this my new relative, Simon, or is this somebody else? Let's see. Let's look at the email. Apparently, I have a new relative. Which is no different, Simon. Okay. Welcome back, Simon. You're not my relative. At least I don't think so. But okay. We have a guy who's, you know, my nephew got married, and the guy says, "I know you." He's from New York. I'm like, "How do you know me?" He's like, "I'm your subscriber." I go to your thread. They're like, wow, that's crazy, but small world. Okay, Andre, Don, Jean, Jerry, Joseph, Ron, Simon. All right, let's start. The weekly strategy. So welcome to Weekly Strategy Roundtable. This is my brief bio for those of you who are new. I've been doing this for over 20 years, concentrating on AI and neural networks. That's my background. I ran several fintech startups here in Chicago, concentrating on AI. Actually involved in another AI company now, so I'm super excited about that. And then we have Keith, who joined us from Options Hotline, and he brings vast experience in managing portfolio, hedge funds, market maker, option trading. So kind of combination of quant trading, quant models, and you know, kind of a trading professional traders. Disclosures are very important. Please read them. If you're new to trading stock or options and involves the risk, I encourage you to visit optionstrading.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA, nor is the SEC. I'm showing you what I do in my own account based on my own risk tolerance for general education information purposes only. All right. Let's take a look at the market and see what happens. So that was what I was sending. XLV got triggered. So I'm long XLV. You can see some of the signals. Today, BIB, not BIB, Intel. But if you look at the history of active trader, this is one of our models that basically shows you signal. And I think October 1. Yeah, Agilent Technology was on October 1. And then I think on September 30th, General Motors, HP, IBM. There was so Agilent BID was, you know, for the past couple of weeks, but it started with Agilent. So you see kind of continues to grind higher. So those are the signals that the model generates. These signals generated every day on active trader. And this is why I entered this position. I didn't want to take a risk of individual stocks. Actually, Eli Lilly was before that. But I did decide to just buy the ETF. So 10-year yield is stable, right? If you look at the 10-year yield, it's stable. We have no new signal. Government, you know, potential risk in escalation in tariffs, right? But interest rates are trading sideways. We don't have initial claims. We don't have unemployment data today because of the government shutdown. So far, it has very little effect on the market because I still think that people assume that it's not going to be more than last time. It was 35 days last time. That is going to be within 35 days, there'll be an agreement. You know, if at some point we realize it's more than 35 days and it's going to impact, you know, how many people are employed and, you know, effect on unemployment data, then I think the effect could get, you know, more meaningful. Right now, VIX is at 16, pretty low volatility. Nobody worried. Dollar is stable. No dislocations in dollar. There's no dislocation in high yield or junk bonds. QQQ is breaking out, right? New all-time highs. Semiconductor breaking out, new all-time highs. Spiders are breaking out, new all-time highs. Small caps continue to grind higher, new highs today. Regional banks. You have vertical move in silver, right? Gold. So gold and silver continues to be ballistic today. Yeah. Market continues to grind higher. Safety asset classes staples, healthcare has been underperforming. That's news, positive news for the market. Metals and miners in general, outside of silver's vertical move to the upside. You have new move in XLK, new copper trying to recover. Platinum also breaking out. China breaking out, like pulling back, but breaking out in general. Bitcoin rebounded, so Bitcoin is also participating. I was a little bit worried that the Bitcoin is underperforming, broke through the 50-day moving average, but usually it's either technology follows, so the market follows the Bitcoin, or Bitcoin, gets back to the, converges back to the trend, and Bitcoin is almost at all-time high, trying to break out as well. So that's also positive for risk taking. Looks like Japan continues to grind higher, make new highs. NVIDIA, I think, broke out, right? So NVIDIA breaking out, that's good, right? Can't really get too far without NVIDIA. So that's positive. Copper rebounding, so copper is moving higher. That's also positive for the market. SPX is above 6,700, so SPX continues to grind higher. And then what else? That's about it. So based on the model, you look at the stock forecast toolbox model, it shows you now it's been fluctuating between neutral or going higher. Now it's basically showing the market is a little bit ahead of itself, but it still sees the potentially we get to 674 on the downside, 660 now as a support, maybe 655. I agree with the model. Short term 655 to 675 makes sense. As we approach a new earnings season, right? In the next 2 weeks, we're going to start the earnings season. Then if you zoom out on 6 months, based on the model, 6 months view of the model, it's the October 676, right? So break above 670, which you already have. You can get as high as 680, right? On the downside, 624. I think 624 is aggressive. It could be negative catalyst, but 640, 635, I think it is reasonable to assume that we can get to those levels. If you look at the bar chart data, SPY, bar chart. 666 is your gamma flip, and 660 is your put wall, and then 670 is your call wall, right? So somewhere between 660 and 670, right? Largest position call is right at the 670, and we're trading above 670 on S&PX above 6,700 for 3 days now, and now we're at 672. So that is now your new support, right? And the next level is 680. Right, and there already you can see building 700 level. So a lot of people projecting end of the year at 700, end of the year at 700. So let's just concentrate instead of October 3rd, let's just look at October, which is coming December, November, November. So one standard deviation move, above, I would, well, you do have a 700. Well, let's just use this, it's fine. So one scenario we get to 700 or above, right? Scenario number one. Right, scenario number one, beyond one standard deviation move. Scenario number two, we're just trading in the 680, 645 range. And scenario number three, we break below 640, like the model says, maybe even 620, 600. Right. Right, and trading is about distribution of possible outcomes. So you can see based on these lines, right? This is October expiration 680 and November expiration 690. If I look at December, it'll be probably 700. So based on the demand and supply for option contracts in the future, November, December, right? The previous screen was the model, right? This is a Tradespoon model based on learning of AI neural networks on the price action and earnings action. This is more of a learning on the, not learning, but displaying demand, the current demand and supply for option contract at certain strikes at certain expiration months. And they usually act as supply and, you know, like either a magnet or repellents, right? It could act as a magnet or repellent. So as a trader, you want to determine correct position size. And the only way to determine position size, if you have the right, you know, you look at different scenarios, right? Positive and negative scenario. Positive scenario, if you're bullish at 700, negative scenario, you know, it's 630, 640, right? You have to look at both because that will help you determine position size. I'm looking at, you know, November, December expiration. You can look at, maybe you don't maybe you're a day trader, right? Or you're doing short-term trading, right? Couple of days, then maybe it's irrelevant what's going to happen in December. But then you just use the same strategy. You can use Stock Forecast Toolbox for shorter time interval, right? It's 1 hour, 1 day. And you can look at options that, options expire every day. So you can look at options, you know, that expire on Monday to know what the range is, right? What is the one standard deviation move for S&P between now and Monday, right? So whatever the time interval between now and Friday. The good news is that you have these 0-day still expiration options that are becoming very popular. So they provide that stability, right? That range, right? You can use them to go through this positive and negative scenario, right? And then if you think that the market is going to go to 700, how much are you willing to invest? Well, then you look at the stop level, and, you know, I would propose stop level is somewhere, you know, 645. You know, if you're long, you know, if your outlook is December. So that helps you determine the position size. And so I encourage you to do these exercises. If you can get the position size correctly and number of positions, I think that is the biggest skill in trading. It's not, you know, how well you read the interest rates or, you know, position or money flow or, you know, technical chart, you know, Bollinger Bands and flag formations, all of that, you know, you can subscribe, people can explain you, but how well you predict your own behavior in terms of position size, number of positions, making sure that if this trade goes against you, you know, you don't lose a lot of money, right? More than you're willing to lose, right? That is a skill that takes time, right? That's why I always propose, you know, you have 4 positions, maximum risk 2.5%. All right, so how many of you say, Vlad, we're going higher? We get somewhere between, well, in this range, maybe 680. Well, 680, we're not that far, but so that's, but somewhere, you know, we can get to 690, 700. Right, so 690, 700, scenario number 1. Scenario number 2, you know, there's still risks on government shutdown more than 30 days or prolonged, maybe, you know, agreements with China, European Union on tariffs. Maybe if Trump doesn't get what he wants, he can start using, you know, escalating the rhetoric, right, that imposing tariffs, and the market doesn't expect that. So, you know, you could trade between 650, 680. And scenario number 3, you know, not only there is the risk on tariffs and on inflation, but also unemployment, right? Projected unemployment is 6.5 by end of the year. If government shutdown and in the 30 days we get a print of, you know, 6.8 unemployment, well, the market is not going to like that, right? Market is going to sell off. So obviously, always risks. There are always risks in the market. But you know, if you believe scenario number 3, then you would invest as if scenario 3 has, you know, higher probability. Joseph, 1, but probably 2. All right, thank you, Joseph, for participating. Chuck, Andre, Don, Jean, Jerry, Joseph, Simon. What do you guys think? Any questions? Anyone else? 1, 2, 3. Andre, 2, 2, 2, 2. Okay. Most of you said 2. I'm gonna go with 1. I think that, you know, obviously if there could be negative events, then it's 2 or 3. But assuming there is no negative events, right? Unemployment doesn't go beyond expectation. Tariffs do not go beyond expectation. I think scenario 1, that would be scenario that is scenario that I'm investing based on. So I think, you know, maybe not chasing the market, but buying into pullbacks, right? I mean, obviously 6,600 is a good entry level now. Maybe 6,500 is a good level. 50-day moving average, 20-day moving average, well positioned. Not a lot of contracts. So I'm a little concerned that people are not hedging. That's always a problem if there's negative news. But for now, that would be the strategy: buy into pullbacks. So how do we help at Tradespoon? We have stock forecast toolbox. We already have seen, you know, you can look 6 months, 10 days, 1 hour prediction, and kind of get, you know, predictions this way. So that's good. You can enter your symbol that you're watching. Like today, there's Intel, IBM. IBM, nice move to the upside. CSX, nice move to the upside. What else? You can look at company screeners, right? To kind of look, October just ran, you know, then you can see aerospace and defense. There's some stocks that are moving well, right? I think General Dynamics is one of them, right? So you can see it's breaking out. So model shows you that. What else is strong? Some of the computer and hardware, right? Strong momentum, you know, like STX, right? So it'll give you ETFs, it'll give you individual names, right? If you're looking for ideas, this is long term. What else isn't strong on there? Electronics, some of the semiconductors, right? I mean, you can see vertical move in Intel today was a signal. Micron, LRCX, you know, all beneficiaries of tariffs, strong demand for AI. You can see, kind of use this as idea generation. You know, some of the insurance companies are doing well, you know, some of the internet companies, right? So you can see which sector, metals and miners, it sees a strong momentum in metals and miners. You can see as of October 1, you know, which stocks or which sectors are in strong momentum, right? And then if you want to be diversified, then you would go to some of these individual names and invest. Work from home, this is back from the, it's funny, from the COVID days. Who's here? CrowdStrike. Is CrowdStrike going crazy? I didn't even know that. Okay, CrowdStrike is doing well. Okay, anybody else? Peloton. Yeah, I think Peloton was triggered several times. Who would have thought, right? Peloton, CrowdStrike. Who else? Teledoc. Teledoc is doing well. Okay, so some of the work from home COVID stocks are actually doing quite nicely, right? So, and then you can use that as kind of idea generations. Any questions on stock forecast toolbox and how to use it in some of the models? Joseph, like you, Loan XLV, what are your thoughts on XBI? Oh yeah, Joseph, you did invest in XLV. Well, BIB was a signal. I really like that. Agilent was a signal. That looks good. Medtronic was a signal a little bit longer. It's, I mean, also breaking out. You know, biotech, BIB, yeah. Strong momentum, single signals are getting generated. You know, I like to trade when I see that the model sees, especially consistently, like CSX today, right? I trade, this was a signal from 2 weeks ago, signal today. I mean, I look at the chart, I mean, maybe overextended, you know, maybe you buy a little at 36, but then you buy a little bit more at 35, right? But you can see strong demand for these names. So, I mean, XLV, XL, you just, XBI is high beta, right? XBI is a lot more volatile. So then you just need to make sure that if you want to risk the same amount, right? Whatever, I propose 2.5%. Biotech, it did a nice breakout, but then it could pull back as well, right? It's kind of you can see it's already at 2025 high, right? So it's probably overbought, right? You can see this line, it needs to break above that line. And this is more of a not just Trump trade, right? This is not just a Trump tariff trades. This is interest rate trades, right? So you got to watch this line. I probably might not want to invest until we get above 105 at least, maybe even 110. So remind me next time we meet, maybe I would personally invest if it breaks through this level, right? And then it's the same trade as IWM, right? Same trade. IWM actually cleared, right? So you might say, I wouldn't invest in both because it's the same trade, right? It's interest rates, perception that interest rates will continue going lower. But small caps, regional banks, right? Biotech, this is all low interest rate benefits smaller companies or companies that have large debts. But good call. Chuck, how do we find the screen I showed? Stock Forecast Toolbox Company Screener. Stock Forecast Toolbox Company Screener, Company Finder. Very good tool. I love it. This is all idea generation, right? Just like Active Trader. This one is not overwhelming, but you got to have a trading plan. You have to be a trader, and you basically trying to build a portfolio and diversify, right? To find, where do I put my money in? Obviously more than 3 names. If you just want to know 3 names, then you can go to Active Trader, right? If you're short-term Active Trader and you're looking for ideas, okay, October 3rd, October 2nd, every day there is published a list. Today it's railroads, CSX, IBM. And then you look, okay, IBM, I don't have any exposure to technology. IBM is trying to break out. Okay, maybe I wait for a breakout, maybe I put small position and then buy and pullbacks, right? But these are idea generation. It gives you a specific entry point and exit point. If you're doing day trading, it proposes 1% target gain stop loss, right? And break your position into 2. Most important are these notes. I encourage you to read them if this is the first time you see them. Maximum loss 2.5%. Propose not to have 4 active positions at a time. If you're new to our services, or you still don't know, don't have a trading plan, a lot of people say, well, it's IBM. But market open and it gapped up, right? So model suggested IBM at 286, right? And it opened at 288 or 289. What do I do, right? If you're asking that questions, then I would propose 2 things. Right, because I propose 2 things. Sorry, let me just, remove this. Sorry about that. I do have to go in a couple of minutes. But I would propose, if you don't have a trading plan and you're not sure and you're new to it, well, 2 things. 3 things. One is Elite Trading Circle. Join me in Elite Trading Circle. We have a live trading room every morning, every first hour of trading session, last hour of trading session. You can ask these questions. Keith or I will be more than happy to answer them and guide you through it. But there is usually no universal answers, right, in trading, because a lot of it depends on your psychology. It depends how much money and where you are in the journey as a trader. We also offer one-on-one coaching program, which I also strongly consider. If you're asking these questions and you are committed for one-on-one coaching, you committed financially, you committed time-wise, you have time and you have money, then I encourage you to get one-on-one coaching. Obviously, if you don't have time or you don't have money, then yes, I would join live trading room, right? Trading room, and again, if you have a full-time job or you're busy, then you can at least watch the recording, and then we'll be more than happy to answer all these questions. Any questions? All right. So that's the Elite Trading Circle. I mean, you can see my trades, right? You can see today I trimmed XLV, I added Amazon, open Amazon position, I added to Bank of America. So it's a combination of both stock and option trades, right? So in Elite Circle, you can combination of stock and option trades. So you can participate in Morning and Live Bell and look at the trader's log. We also have weekly trader, monthly trader. These are longer term trades. And then we do have different shadow and spread trading services. All right, guys, that's all I have for today. There will not be, yeah, Chuck, you can do Elite Circle, register for Elite Circle and you get access to all of this. You don't forget 30-day money back guarantee. So I do propose you try Elite Circle. You get 30 days of free, basically training and free learning. We have active trader, weekly trader, and monthly trader. These are the signals. And then if you want to follow portfolio, then it's, you know, Robo Investor, Elite Circle, or Premium. These are spreads, Robo Investor, stocks, and Elite trades. All right, there won't be strategy roundtable next week, but because I'm traveling, but it will be the week after. So please join me. I appreciate everybody's joining today and following. Thank you very much and have a great day.